Hello traders, today is the 15th of June. My name is Neville Hornsey. I'm a market analyst for YouTrading. And today I'll be doing a midweek update. Okay, starting with the Forex heat map on YouTrading.com. We've got the US dollar here, which is the weakest, closely followed by the Canadian dollar. Then we've got Australian dollar, which is the strongest, closely followed by the pound. Yen and Swiss franc opposing, so there's no real risk on, risk off. So people may be just looking to see if they can play the strength of the Aussie versus the weakness in the US dollar. Now, the euro was bid this morning when we had news that the ECB Governing Council were gathering to discuss the current market conditions. They're looking likely to reinvest some of their pandemic emergency purchase program back into the economies within the Eurozone that are sort of weaker, see if they can sort of keep everything balanced, looking to see if the market actually likes that. We go to the euro versus US dollar, and we can see that the euro this morning is higher. Looking at the RSI, we had, back here in 20th of April, a low, and then 12th of May, a higher low on the RSI as price action came lower. So divergence in price there. Then we had the rally up, and we've come back down to sort of backfill that impulsive move. So the RSI isn't sort of showing that it's bullish yet because we're not above the 50, but it's also showing that there is some buying coming in at these levels around the 1.04, with the General Counsel of the ECB talking today. Obviously, if they do come up with some sort of stimulative measures, that might actually be good for the euro. But most of this action is based on what's happening with the US dollar. If we look to the right-hand side, we've got the DAX 40. Obviously, the German economy is the strongest economy within the Eurozone. So what happens here is kind of indicative of how strong Europe will be in the future. Again, we've swept the lows here from the 10th of May. I thought there might be a little bit of demand in this area, but if we look to the left, we've also got the high here from the 7th of March 2022. That could act as support as well. But they might just look below the 10th of May swing low. If we get back above yesterday's high, there's a gap to fill from the opening of this week, and then that's the same on the S&P 500 and other indices. So if we fill that gap, we could then be looking for a long sort of potentially in the future if, obviously strength continues to come in. But the big sort of story today is the FOMC, will they or will they not raise by 75 basis points? Obviously last month, Fed Chair Powell said that they were considering continuing with the 50 basis point rate hike this month, and then next month. We can see that the US 10-year and 2-year yields have both risen to the highs. If we scoot out, we haven't seen this sort of level since 2018. So the yields have pushed higher on the rate hike decisions anyway. If we go to the what happened before, we obviously March the 16th, 2022, we went from the 25 basis points up to 50. So that was a 25 basis point rate hike. And then in May last month, they raised it by 50 basis points. So the market's now sort of starting to price in sort of more of an expedited move higher, rather than just being 50 basis points. So looking to see if there's going to be a 75 basis point rate hike. The probabilities yesterday were almost 100%. Now there's actually some market participants thinking there might even be a 100 basis point rate hike, taking the sort of range up towards 2%. If that happens, then the market needs to probably reprice the US dollar and yields higher. If we don't get the 75 basis point rate hike, which is what the majority of traders are looking for at the moment, if we only get the 50 basis point rate hike, as was sort of mentioned last month, then that could be disappointing. And if we go to the active trader platform, we can see that the US dollar index, has risen to get back above the 13th of May swing high here. They looked above. If we close lower than yesterday's low, then that would be a swing high here, with the potential of yesterday's low then acting as resistance. Obviously, if we were to have disappointed market participants, we are seeing the RSI also sort of showing some negative divergence. So potentially the momentum to the upside is stalling at the 105. If the market is disappointed and doesn't get the 75 basis rate hike, or even the, for those that are looking for 100, if they don't get that, then there could be a bigger sell-off. Obviously, we don't get bearish until we get a change in market structure. The momentum is still to the upside long term. I'm only thinking we come back down towards the 102 to sort of test this breakout level. But obviously that all depends on what happens with the US yields and things like that. Considering what happened in the S&P 500 on the left and the NASDAQ on the right here, when we learned that there'd be rate hikes, we can see that there's been like a downtrend what I've got here is a fib extension from the highs to the next most significant swing low back up to the retracement high here. The extension takes us down to 1.618, just around the 3,500 sort of level, which also, if you look to the left, is pretty much where this balance area here from 2020 through sort of the autumn of 2020, that balance area here, where that then broke out to the upside, that is kind of pretty much where this fib extension to the downside extends to. We've taken out the swing low here, so potentially we have had 5 waves down. So if Elliott wave technicians are thinking that this is the sort of end of this impulsive move, we're now going to wait for a 3-wave correction to the upside before potentially just building out a longer term sideways move. Then we could be sort of just looking below this swing low from March 2021, getting back into the sort of weeks range. We got this opening price gap from the start of the week. So this is Friday's low. We could probably be back to 3897 if the Fed, or the sort of press conference with Fed Chair Powell, it doesn't sound like they're going to raise rates. They think things are going to be more transitory, or he comes up with a good excuse not to raise rates as much as the market wants. Then maybe this sort of descending channel then breaks to the upside eventually. But at the moment, everyone's looking for downside pressure. I'm looking to see if we can get down to the 3,500 sort of level, just sort of finish this extension to the downside. But obviously, I'd be happy if we get back above 4,200 and eventually get to the 4,300, take the liquidity up there and test the 200 period moving average. The NASDAQ and the S&P 500 are basically following the same path. So if we see divergence on the smaller timeframes between one or the other, then that could also be a leading indicator. So if we were to go down to the hourly on both of these charts, now we can see here that this swing low from 13th of June at the end of the day into the 14th of June, 24 hours later, positive divergence here from the RSI. Same here on the NASDAQ, so on the hourly chart. So again, if we get back above the 3,800 on the S&P 500, we're looking to get back above 11,500 on the NASDAQ to confirm this move up, which then takes us back in to sort of start filling these gaps that you can see here between Sunday and Friday. So that's kind of what I'm looking at the moment, just looking to see how the market reacts to the FOMC tonight. Obviously, the euro could go higher based on what the ECB is doing, but mainly it's down to the US dollar tonight. If we do get a move today, then that could be undone if the FOMC sort of makes people have to reprice. Okay, good luck today, and I'll speak to you again tomorrow.